Well, joining me now to explain why Knight Capital Group's, nope, we're going to do something else. All right, you can bet some traders are relieved the day is over. They are just coming off a roller coaster day at the New York Stock Exchange. Trading glitches cast a wide net with some stocks experiencing heavy volatility, others with a surge in trading volume, and then others with halted trading. The company caught in the middle was Knight Capital Group, one of the nation's largest trading firms. And Charlie Gasparino is just cruising into the set here to talk to me about this. Do we have any lights for him by any chance? There you go.
No makeup, no lights.
It's all good.
The story's
Give us the latest.
Well, the story's still unfolding. As you know, this is what we're getting from inside the regulatory community that's looking at this. Now, who's in the regulatory community? The New York Stock Exchange and the SEC. And this is what they're telling us right now, that Knight is likely to face significant losses because of these errant trades. Why is that? There are very strict rules on exactly what the SEC, remember, the SEC is in there right now looking at which trades they can kill, DK, get rid of, and which trades they can keep. There's strict rules, according to the New York Stock Exchange, as to which ones you can kill. That's why the stock is actually going down further. That's a pretty scary number.
Yeah, that's a big move.
Because the market knows, as we were first to report, this could be significant because there isn't much wiggle room as to what trades you can kick out. See, what Knight wants is the SEC to go in there and say, all the trades are bad. Okay, let's just one big do-over. That cannot happen, apparently. So now they took out the trade.
There's a cascading effect after that to how people reacted.
Well, there are strict rules, and these rules I think were promulgated after the flash crash and clearly after the Facebook IPO debacle. That you have to follow these rules in order to say which trade is good, which trade is not. Apparently, the rules are pretty strict. They've DK'd 6 stocks, I believe, right, of the 148 that were initially found problematic. I don't know how much of the rest they could DK, and that's the problem. And that's the problem that Knight faces. What we understand is that the losses on the high end, depending on how many they ultimately find are no good, how many trades, could go up to $300 million. That would be a significant problem. We should also point out that, and these are all estimates, we don't know, they are still working on it, but here's the preliminary word we're getting from inside the guys in the room, is that this thing could be pretty bad for Knight.
Yeah. Break down for us exactly what happened for people who are just coming in on this.
Well,
we're talking about the fallout, but we want to bring the audience up to date on what happened. The market was all over the place this morning. They traced it back to Knight trading,
It was 148 stocks that traded bizarrely.
Right.
And when they trade bizarrely, it looked like they weren't real trades, that there was some error that sent these stocks, going wild. How does that happen? How do they catch this? Well, they have all sorts of circuit breakers, and they have monitors at the New York Stock Exchange, at the NASDAQ, you name it, all these places. The problem apparently was primarily at the trades placed through the New York Stock Exchange, and that's when Knight Trading basically was alerted by the New York Stock Exchange and by the other exchanges, you got a big problem, and then they went back and they found out that 148 trades in 148 stocks. Now, we don't know the amount yet, right? Were problematic. They were erroneous. There was either a fat finger trader hit the button when he should have. They put in an algorithm that was played. These complex trading systems known as algorithms. It's like a computer program that says trade these types of stocks when X, Y, and Z happens.
When this happens, do this.
Right. And by the way, and if you put that in wrong, right, it's a problem. Also, Knight was talking about technology issues, right? There's a problem with their technology. Big mess. We don't know exactly what caused it right now. We're going to probably find out in the next couple hours. We should point out that the New York Stock Exchange and the SEC thinks they're going to get their hands around this either, imminently or tomorrow morning. It's not going to last for 3 weeks, this story. But it is a pretty scary situation when you've got a company like Knight, publicly traded, does lots of business.
Huge market maker.
Huge market maker. What does market maker mean? Break that down. It sends order flow to the New York Stock Exchange of trades that occur. You getting some breaking news?
No, I'm sorry. I just lost my earpiece for a minute.
Anyway,
so I was trying to figure out what they were going to say.
If we could see a stock chart, that was a scary. This is a scary day for Knight Capital.
Okay, Charlie Gasparino, thank you for those details. Joining me right now to explain why Knight Capital's group ratings were cut is the man who made the call, Sean Egan, co-founder and president of Egan Jones Rating. Sean, great to have you back on the show.
Thank you, Melissa.
So you stepped in very quickly to make this call today when all this was going on. We were watching the market gyrations, everything sort of calmed down, and then we heard that you were cutting the rating. Was it purely based on today's incident, that downgrade?
Today's incident certainly did not help, but there are some challenges that night trading was facing even before today's interest activity and even before the Facebook problem. Second quarter revenues were down from $326 million last year to $289 million this year. It's an 11% drop. You have net income decline from 17.5 down to 3.3. And you have total assets rising from 7.1 to 9.2, while shareholders' equity remained the same at 1.5 billion. So leverage has increased.
So from here, are you worried that there is more downside risk? Are you taking a wait-and-see attitude?
Well, actually, we'd like to see the company do something proactively to calm investors. They've seen the share price of Knight decline from $10.50 below $7 is about a 34% decline in one day. And you really like to, the issue that comes up with a lot of institutional investors is the counterparty risk. Is Knight good? How do I know that if I trade with them that I don't have to worry about waking up the next day and seeing some problem? And therefore, Knight, if they're to be proactive, it would really calm the market. If you see another drop like today, it's a disaster.
So it sounds to me like you think today's glitch was a symptom of a larger problem.
There's no question. Problems like this shouldn't happen. The Facebook problem should not have happened, and it's at a point when investors are fairly nervous.
Wow. All right, Sean Egan, thank you so much for joining us. We appreciate your time.
Not a problem.
Ya no puede caminar porque no tiene por qué parlar.